McElroy Show. I'm your host, Danille, and I'm here with Ken.
What's happening?
So thank you for tuning in. I love the comments we had last week, so make sure premium members ask away. And those of you on YouTube will be answering one YouTube question as well, so make sure you ask. Anyways, today we're going to be talking about inflation.
Ooh, my favorite subject.
Well, it seems like it's a hot topic right now because most economists you listen to are saying we are going to have inflation.
Yeah, well, I mean, I don't know how you can generate $5 trillion worth of financial stimulus and not have some sort of impact. I mean, that's basically what we're talking about. Most people, no matter what, no matter where they stand politically, believe that we're going to have some kind of inflation. I'm not saying we didn't need that money. I'm saying that it's a lot of money that we put into the economy to help the economy.
So let's start at the beginning, just for the people that don't know exactly what inflation is.
Sure. Well, inflation is basically the rate of which cost of goods and services increase over a period of time. So, think of food. Like we all go to the store. How much is milk? How much is a cup of coffee? One of the things because I went on Facebook and I saw the question, one of the things that I like to show is, first of all, there's not very many companies that have been around over 100 years. And even more so, if you think about it, there's not that many products. But one of the companies is Campbell's Soup, of all things, specifically tomato soup. It was kind of, it's been around, believe it or not, since the late 1800s. And so I brought this chart for today, and this is a very interesting chart. And if you take a look at this, you can kind of see that in the 1800s, it was kind of between 7 cents and 12 cents up until about 1973. Now, and then, of course, it went up, and now it's basically 85 cents. And why do I show you this chart? I show you this chart because that's inflationary. It's the same soup, and it really spiked in 1973. And so the question is why? And so that's kind of what we're going through now, although it was very different times, obviously. But there's a bunch of things that happened in the 70s. One was Nixon took the U.S. off the gold standard in 1971. Another thing that happened is there were price controls that the government had on food, which was needed because we had gone through all these wars, the Korean War and all of that. And so you have a combination of those things in the Bretton Woods Agreement, which was the agreement that basically tied gold to the dollar. Now, all that's really important. And I know it was a long time ago, but it's important to understand why the prices were basically flat during this period of time and why have they jumped up. Now, you're going to see this in coffee. You're going to see it in all kinds of things. But that's what inflation is. Inflation is the rise of goods and services. In this specific example, it's soup.
Okay. And then what happened when he took us off the gold standard for people that don't understand?
So the reason why that's important is at that point, the government was allowed to print money to be able to pay for stuff. That's all it really means. And so there's, if like right now they're printing money or fabricating money, and it's called a fiat currency. That's what it's actually called. So we moved to, it was originally pegged to gold, and now it's not. And so, we're printing based on things that we need. And it's, it's each president has done, very different things around this issue, right? So you go way back and you can take a look at all the different presidents this is not new information. And so they print based on, the needs at the time. And if you take a look at the dollar itself, you can see the dollar has devalued at a very similar rate. So this is why Robert Kiyosaki says savers are losers. It's because if you found money, let's say from a long time ago, let's say you found $100 in a tin can, from your grandparents or whatever, that $10 bought a lot more stuff back then. Now, doesn't really buy as much. And that's really all that it means. It's an erosion of wealth. And so what you want to do is you want to be on the right side of this. And there's three kinds of inflation. There's demand pull, there's cost push, and there's built-in. So built-in inflation is labor. So like right now we're dealing with this. We just had a lot of discussion around the minimum wage increase, right? I think we talked about it last week. So that's what we would call built-in. The government says, okay, as an example, wages are going up. Now, what that does, and we talked about this, is that prices have to rise for that particular employer or whatever, who's ever employing that person. Now their margins are getting squeezed, and so generally those prices are going to rise. And so the cost push is very, very, very different. So as you guys know, I'm building apartments and we're building houses as an example, and we're in the real estate business. The components, the concrete, the lumber, the copper, those components that we're getting right now make the actual real estate itself more expensive. And so, your margins are getting squeezed. And so this is why a lot of builders right now won't commit to a price. So if you're going to buy a home right now, you can put a deposit down. But right now, they're not really locking in on the price because there's a cost push, because they're going to have to make their margins. And if if they lock in on a price of a home today, and the cost of that home is, say 20-30% higher, then all of a sudden they might be building that home for, no profit. And then there's demand pull, and that's kind of a scarcity issue. So I always tell people, think about like a Super Bowl ticket. Like I can't remember what the Super Bowl ticket was the last time I went, but let's say it's $250. Well, that's not what they sell for, right? Those are, they'll sell for thousands and thousands of dollars. So that's more of a scarcity issue, but that's a demand pull. There's a little demand. So that's what's happening with real estate right now on the inventory side. Is, there's only 1 million homes, let's say, listed in the whole United States. It's the lowest ever recorded on MLS, the multiple listing service. So now prices are going crazy in these particular areas because of demand.
So let's answer some questions here. So Nate wanted to know why inflation is a big deal if the wages increase as the price of goods increase.
Sure. Okay. So again, you have to think about it's. I'm an advocate of the minimum wage increase, and I'm an advocate that wages need to increase, because if we have inflation of, let's say, 3%, and you're making a 3% wage, increase. Let's say you meet with your employer at the end of the year and they give you 3%, and inflation has been 3%. You haven't moved.
Right.
It's just, basically the cost of goods. Now, it's not a perfect science, not perfect math, because obviously, inflation is measured a lot of different ways, and we don't specifically know what you're buying, but your 3% is basically keeping up with 3% inflation.
But let's talk about that, because while, that is the standard average wage, a lot of our viewers probably get that 3 or 4% increase at the end of the year. But real inflation has been higher than that traditionally over the last few years. And that is why people are struggling more and more to live, really.
Yeah. So if you really want to dig into this issue, go to Shadow Stats. Shadow Stats is a great thing, and there's all these conspiracy guys. I'm not a conspiracy guy. The report, well, I kind of am a little bit, I guess. You got to take a look at that stuff, and the government has, just like they've done with the unemployment rate, they put out what they want people to see, but historically, in the last, let's see, I don't know, I could be wrong, but maybe 10 years, inflation has been, in the 1.5% to 2% range. Okay, that's been manageable. So if you've made it 1.5% to 2% in your salary income growth, then you basically have just kept up with inflation. So you might find yourself maybe not that much better of a situation. And there's lots of things, guys. So obviously rent growth has gone way higher, and some of the food has gone way higher. And
well, didn't you tell me, and I'm going to forget the stats exactly, but years ago, the percent to rent to wage was one thing, and it's much higher today.
Yes, yeah, it definitely is. If you just look at this, back in the day when my parents, let's say, had a home, my mom could stay home and my dad could work, and they were paying for their home just fine. And then slowly over time, now what's common is two people in one home, and even more now, all working to be able to cover the payment of that home. So that's what's happened, since the 70s when I was growing up, and I didn't really know what was actually happening during that period of time, but things are getting tougher and tougher and tougher, and things are going up, and that's all this is. It's not something to be afraid of. It just is what it is, and so you just have to kind of know, how do I get on the other side of this? Because there is a way that people make money on inflationary economy. They just do it. And so the people that study this, there's all kinds of people out there saying the dollar's going to collapse. And this is why you can't get physical gold right now, by the way. And you can't really, we saw the thing on silver. That was kind of a blip on the radar, with the run on silver recently. But this is why people go to hard assets, because with gold, it's something tangible. It's something that can't be manipulated.
So Kyle has a question, and so does Nahia, and I think it's kind of a question a lot of people watching probably have. And it says, if cash is worthless right now, which I wouldn't say it's worthless, but it's obviously going to inflate, so the value of it is going to go down. In the housing market, you have rising. So what Kyle wants to know is, if the housing market corrects and you need the cash to purchase, basically, should you purchase it now when it's higher, or should you wait for it to correct and be sitting in cash?
Sure. That's a really, really good question. Okay. There's a bunch of things going on here. One is you have an interest rate issue, right? And so when interest rates are low, economic output is more, period. There's people buying cars, there's people buying TVs, there's people buying real estate, and that causes inflation. It just does, because.
And you think that the housing market has inflated
100%, and there's an inventory issue, as we talked about earlier. So there's that issue. I believe, and I'm putting a video out on this on Friday, that we're going to have a really rough second half of 2021. I really believe that, because there's over 3.5 million people that are in forbearance, and 2.5 million of those are over 90 days delinquent. And so there's some percentage, people will argue with me on this, is it, I say, I just picked 50% for the video. I don't know what the number is going to be, but you got to imagine that there's at least 50% of the people that are going to be in a position to have to be able to pay that money somehow. And, so we're looking at 1.5 million to 2 million people, I believe, that are going to list their houses. They're going to sell their houses. They're going to default. They're going to whatever they're going to have to do, and in addition to that, this rental moratorium is going to be lifted soon, hopefully, because there's all these landlords that can't pay their mortgages and they're in default. And, it's a mess right now. And the most recent stimulus did not have anything in there on the forbearance side. So it had some stuff in there on the rental side. So I think that we're going to see an onslaught of listings at the tail end of this year. And it's obviously going to trickle into next year. It takes a long time for people to default. And the thing, just like it did in 2008, it took years for the thing to unravel. So it's not all going to hit. And to answer his question directly, we're not going to see, inflation doesn't happen like tomorrow. It's going to be, it's going to take time, and it's going to be over a long period of time. So there's plenty of time. Cash is not trash today. You just need to be thinking that way and investing it. Real estate is still buy low, sell high, still. And so I wouldn't buy now, personally. But if you can, you want to make sure that the real estate is covered with a tenant. And I also think we're going to move more toward a renter nation. So I just had a conversation with somebody the other day in Phoenix, and he said, "Hey, I can buy a 2-bedroom for $120,000, and it's covered with a tenant that's paying $1,000 a month." I go, "Do that deal." Right? So could that thing go to 90 or 100? Sure. It could, but as long as he has that tenant in there covering that mortgage at a really low interest rate, it doesn't really matter. He's not going to have the financial stress on them, as long as you can keep that thing covered with a tenant. So, but I do think that we're going to have some price adjustments. I think we've been on this incredible run. I don't know how things can go up so much while everybody's out of work and all these businesses are closing. And it's just an interesting time. You got to step back from it all and realize what's really happening here. And we have a new administration in. We have the money coming out to the people. It's only going to last for so long. And then at some point, those missed payments show up. Yeah.
Well, and to really just directly answer the question, it's not so simple as don't buy now or buy now. There are still cash flowing deals out there, and you just have to make sure the deal you find cash flows.
That's right. Yeah. I talk to people in all kinds of markets, all kinds of sub-markets all over the place. And there's everybody says, "Oh, my real estate is booming here," but it's all perspective. In some areas you're talking about $500,000 to $750,000 average home. In other areas, you're talking about a $200,000 average home, like in Cleveland, Ohio, or where you're from, or $250,000 or $300,000. So it's all just math, and obviously you don't want to buy one of those unless you have a renter to cover in the mortgage payment, and all the other expenses, and you want to make sure that it cash flows. But I know that the Cleveland Clinic is growing right now, right? And it has been for a long, long time, and there's a housing shortage around there and all those kinds of things, and the housing is relatively cheap. And I'm not advocating to go buy in Cleveland. What I'm saying is there are markets that are fine and others that are not.
And Jing has a question, and it's kind of what we touched on, but a little bit different. He says, how do you balance savings for an emergency versus investing in uncertain times like this?
Another good question. So what I do is what we do on our properties is we make sure we have 6 months of reserves. Mm-hmm. So that's what we do. At all of our properties, I have 6 months mortgage payment, 6 months operating expenses. And so every single one of my properties is set up that way. And so you got to kind of get comfortable with whatever that means to you. And then from that point on, invest away. But you should not dip so low into your reserves that you don't have any kind of what I call dry powder, just in case a tenant moves out and you had a 2 or 3 month vacancy, or the government says, tenants don't have to pay anymore, or whatever it is, that's coming next.
Okay, so that makes sense. And then also something else you had me do is put a home equity line against the property so that I, for any unexpected circumstance, can put it on there as well for a very low rate.
Yeah, good point. So if you have equity in your home, what I would do is I would go get yourself an equity line, but not necessarily draw on it unless you need it. Or you can draw on it and stick it in.
It is adjustable.
Yeah,
but
it is adjustable, but you could also draw on it and just hold on to the cash. So as an example, I got one of the EIDL loans, which is part of the first CARES package for a resort I owned. And it was $200,000, and we got hammered in the first 6 months of the year. I kept that on high ground because I wanted to have it, and I didn't, and so I'm glad that I did. I obviously still owe it back, but it's a loan against the property, and it's sitting there for use, and so I think that's just prudent. If you have a lot of equity in your home, or you have a lot of equity in something, or you've paid cash for something, and you have no debt, inflation will eat away debt. And so what you want is, let's say you borrow $100,000 on a fixed rate, and you have that still sitting out there for a long time, and you get big inflation. Well, you're going to make 3%. That money is going to erode over 10 years. It could erode by 30 to 40%, and you might still have that 100,000 sitting out there.
Well, just like in California, you see people bought those homes for nothing, and now they're selling them as their retirement for a couple $1,000,000.
Yeah, exactly. Yeah, that's exactly right.
Yep. And then to switch gears a little bit, Amy from Premium, she wanted to know if you see Bitcoin as a hedge against inflation.
Yeah, I know a lot of people ask me this question, and crypto is one of those things. Here's why I think crypto is important right now, and why it's rolling, and why guys like Elon Musk are coming out, and supporting it. It's because of what we're talking about here. It's because the government just dumped $5 trillion on the economy, and you think about foreign governments, and and all these people are probably frustrated with the U.S. government and the U.S. dollar because of the fact that it may devalue. In fact, all you got to do is Google, is the U.S. dollar going to devalue? And there's a ton of economists that say, yes, it's going to devalue a lot. Now, I don't know if that's true. I'm not an economist, but the point is that's what's driving things like Bitcoin. That's what's driving things like gold. And so, I don't want to come out and say Bitcoin is a good investment, because it's just not my space. I can specifically talk about real estate. But do I have Bitcoin? Yes, I do now. I've purchased it recently. And do I have gold? Yes. Do I have silver? Yes. Do I have real estate? Yes. So
it's just it's another way to diversify.
Yeah, it is. It's another way. But to me, it's kind of like the stock market, and I, no slam against the stock market, but I don't understand it. What seems to be driving it is demand. And that's not a fundamental to me. What I like is a tenant that pays, that I can go down and collect it and, pay out, and have that cash flow and have that certainty.
And have an asset.
Yeah. And I'll tell you what, you can go nuts just watching the price fluctuations on things.
Yeah. But something else with Bitcoin I think is interesting is it has to do with inflation, because it seems that the more money they print, the higher that Bitcoin is valued. So it's like as the dollar devalues, Bitcoin increases in value. And then potentially as the dollar strengthens, Bitcoin would decrease in value.
It's very probable and possible. I've watched that myself. It's interesting to take a shot at that, because obviously, they're printing like crazy, to help people. And if you're saving cash right now, and you have a bunch in the bank, you really got to be looking at other things. That is the point. But in my opinion, it's not urgent. And so if you're going to jump on Bitcoin, you got to look at it as almost like an insurance policy. That's how I see gold. I see it as like an insurance policy. I don't see it as necessarily an investment. A lot of people look at it as an investment. And I hope it goes up for you. I do. But I don't know. I don't know the answer. I don't know what's going to happen. I can't imagine the government's not going to really try to throw their noose around Bitcoin and regulate it and make it, control. Because it really is a battle against the U.S. dollar, and so we just witnessed how political things can be, over the last few months.
When a lot of things we don't think can be done
right,
can
whatever.
be done.
Like, it is what it is. Like, it's like it's a circus. And so, the point is that I can't imagine that the Federal Reserve, the Treasury, and all the big banks and the government aren't trying to put their arms around this thing and put some regulation around it. And I do understand that it's how it works.
Yeah, it's blockchain
yes,
and all that.
I understand all that, but I can't imagine. Who knows what'll come out on that? But I guarantee you something's going to come out on that.
Well, just like Robinhood shutting down, abilities to trade, there are ways.
There are things that there are tools in their toolbox that I would imagine that we will see at some point.
Well, and just to clarify, when you said you see Bitcoin and gold and silver as insurance policies, there's still risk to those. So it's not like a real insurance policy, but it's nice to spread your wealth among a few different asset classes.
Yeah. I mean, just if you want to look at risk, just look at Bitcoin over the last year. Look at the ups and downs, and same with gold, right? And real estate. Real estate is just longer. Real estate can go up and down, and it has. And the key, the thing about real estate, the thing I like about real estate is I actually like to control around real estate. If you look at the fundamentals and you see people are going to lose their homes, they're going to sell their homes, and they're moving, and there's migration all over the place right now, and it's creating pressure on all kinds of on all kinds of fronts. And so as long as you know that and you buy something and it's covered and you know that the area is growing and, the fundamentals are good and you can always find a renter, even if you have to lower your rent a little bit, if you have a lot of cushion there, it gives you a lot of flexibility. If rents drop in an area, then, you scramble and you just do that deal and you're trying to cover your expenses. I like that a lot better than, throwing money into and then just watching it every day and seeing if it goes up or down.
Yeah, it can be stressful. But
yeah.
Well, anyways, guys, that kind of wraps up today. If you want your questions answered, go to kenmcelroy.com/premium, and we'll see you guys here next Monday.
See you guys.